Well, we continue to watch this market that seems to be just truly intent on chopping around here today, and a lot of analysts have been warning about this all week long, saying when you get into a thin holiday type trade, markets can do really funny things and they can really chop you in and out of the market. Well, today is no different. Let's take a look at our corn trade right now. Last time we looked, it had reversed and gone higher, and while we were gone, it reversed and went lower, and now it's back to unchanged. We have December corn unchanged. We have March now up one tick at 584.5, but that doesn't really tell the whole story. It's been as high as 586, as low as 580 today. Now it's up a half cent. So, if you stick around for a couple of minutes, it'll probably be a different direction. In the soybeans, you have January 5.5 lower at 1268 3/4. March down 6 1/4 now at 1280 after it got as high as 1291 in the early morning trade. Well, on the wheat, with these quotes provided by Bar Chart, you have December Chicago wheat down 2 1/4 and March down 2 1/2 at 8.55 per bushel. So it's kind of in the middle of its trading range. Meanwhile, in Kansas City wheat, you have December 4.5 higher and you have March 5 higher at 871.5. Well, what about Minneapolis wheat? Which way is it going to go? It is higher. December up 6 1/4 at 1029 3/4. March up 4 3/4. It's at 1036.5. Look at July, up there 7 1/4 cents higher right now. Cotton market has December now quoted 164 points higher, but you have March 128 points lower. How's that for a spread change on neighboring contract months there? So that's about a 290-point spread right there. Let's bring in Brian Hoops, the president of Midwest Market Solutions. We'll chat a little bit about this market action here. Choppy is an understatement today here, Brian, in the ag commodity trade. So how do you weather a storm like this? Just stay away or what?
Yeah, good morning, Marlon. Just wait until Friday. If you think this is choppy, it's going to get worse as we go through the holidays. So, it's a full trading day today, full trading day tomorrow, but then the markets close until Friday morning. And for a lot of traders that have been, very active this year, they're just going to want to take Friday off completely instead of coming in for, just a very partial type of a trading session from 8:30 to 12:05 in the grain and livestock markets. So you can have some pretty big swings because the volume will be less, but it also can turn very choppy. A lot of times you don't have much in the way of news, and we've kind of seen the dearth of some news here recently. Not a lot of market really moving news, no private export sales for several days now. So, a lot of the trade is, as I said, just kind of starting to unwind positions and may take some profits and positions off the table ahead of Wednesday and just kind of wrap things up for the week and then start again next week.
What about this crude oil trade today that reversed out after selling off overnight, and now today on your West Texas Intermediate crude, you have January $1.44 higher at 78.19. Is that helping to keep the corn market from falling apart today?
Yeah, it certainly is. I think the crude oil kind of had pulled back when it was announced, the White House announced they were going to release some oil out of strategic reserves, but it's only 50 million gallons, or barrels. It's really not going to make any major difference whatsoever. And so the crude market has come back to life, kind of anticipating that this is not really a non-event. That's helped to support the corn market, but we're also seeing strength in the wheat futures, particularly Kansas City, Minneapolis as well, showing a lot of strength today. And that's spilling over to the corn market and keeping that market well supported in addition today. So just not, as I said, just not a lot of news, but the crop ratings that came out yesterday did show winter wheat crop down 2 percentage points from last week and very similar to last year's crop. And we're getting closer to dormancy here in the southern plains. And, it's certainly been dry in the plains, but really those areas of Montana, Idaho, the upper plains areas where they do grow spring and winter wheat, those areas are the ones that are most concerning and showing the most drought-like stress because they have not had a lot of rain to break that drought since last summer.
Boy, that is the truth. Montana has by far grabbed the lead on topsoil deficit or moisture deficit and subsoil as well. Welcome back, and we'll look at our cattle and hog market activity here on a Tuesday right after these messages. Come on back. Well, we're back with Brian Hoops of Midwest Market Solutions. Brian, any word on any cash cattle trade yet today? I know yesterday we had just a few on a dress basis, no live sales. but everything's going to be compressed this week. Anything yet?
Yeah, no, unfortunately, we haven't really heard anything yet. The futures market reacted yesterday and again today, like we're going to see stronger cash trade. The show list numbers that were assessed were about 5,000 head larger than the previous week, but still those numbers are really tight, around 230,000 head or 220,000 head, I mean, for the week. And that is, some very tight numbers. So wouldn't be surprised at all to see some strength in the cash markets this week, maybe another dollar, but so far Packers have not showed their hands of what they're interested in bidding.
So just like in the grain trade, we have the livestock trade chopping around on both sides of unchanged too. Let's take a look at live cattle, see where we are right now. So we currently have December live cattle 32 higher. That active February contract is only 7 cents higher. We're at 139.05, about 25 cents from our high of the day. It's actually got a fairly narrow trading range today. That whole range is not even, not much over half a dollar wide from the high to the low. Meanwhile, on the feeder cattle market, so far today, you have January up $1.32 at 163.02. That would be about 70 cents off of our earlier high this morning. The March contract is 40 higher now at 164.50. And let's take a look at lean hogs. The lean hog trade so far today has December now 47 lower, but hold the phone. You have February trading 7 higher, and it's now at 83.10. So going nowhere fast in the lean hog market, as it just seems to be gyrating around and going sideways at the moment. Well, Brian, good to talk with you again. Thank you, sir. You have a terrific Thanksgiving Day holiday out there, and we'll talk with you soon. Brian Hoops, Midwest Market Solutions. Janet, back to you.